So let's think about it this way: is again, even though from a financial standpoint, right? They're affluent families may not need insurance, like, but why would they still use it in an estate planning context? Like, what's the use, even if you don't need it? And why do you see some of the wealthiest families in North America using this tool, even though it's demonstrable they don't need it, they don't need a dime of cover?
Absolutely. Absolutely. So when we traditionally think about insurance, we think of the risk management side, right? Again, I die early. I need to provide income for my family. Wealthier families love life insurance. And the reason is, as we know, CRA has reduced or eliminated most of the ways to reduce or defer taxes. Things like tax-free savings accounts are amazing. We love them, but they're severely limited in what you're able to do with them. Trusts are great. Trusts have a limited time frame to be able to shelter investments. When we look to insurance, we look to permanent, typically participating insurance, where you're going to have a cash value and a death benefit. And there's a lot of reasons that people like it. There's liquidity at death, very quick access to funds as soon as a claim is made. So people don't need to be forced into a fire sale of assets or properties in order to pay immediate bills. There's a diversification of the portfolio. And this is actually really, really key to a lot of the bigger portfolios in Canada. So we look at, the different types. So RSPs, non-registered tax-free savings accounts. Within that, you're able to have different levels of tax shelter, right? RSPs are tax sheltered while it's in there. Tax-free savings accounts, again, are amazing. Non-registered investments, typically are taxed on the growth annually, and with the changes that are proposed to be coming, it could be even higher for the higher net worth families. What we're able to do with insurance is take a portion of those taxable funds, transfer them to a policy, and have them pay out tax-free. And really, that's the key to looking at this type of insurance. You have access to that cash value, which is amazing. And again, access to that cash value, and I'm not sure many people know this, fun fact, Walt Disney borrowed against his life insurance policy to start Disneyland because nobody in his life believed that it was going to be a success. So having options available is really what insurance is all about, is providing you different ways to make your goals happen.
Right. So if we just, summarize that, when we look at affluent families, the reason they use estate planning, insurance becomes part of an estate plan in some cases, is that, you do have that ability, that liquidity that is there to settle tax bills. It's there to support beneficiaries and to transmit assets between generations. Diversifies their asset base away from, into another area. It gives them another type of asset that's not correlated to, the world and the business cycle at large. And it gives them certain other flexibilities that might not otherwise be available with another product.
That's right. It doesn't force them into a sale at an inopportune time.
That's right. Yeah. We all know the CRA wants to be paid right away, and if the market is, the market for the assets that you own is not having a good moment. Selling low and buying high is we know is the path to ruin. So it gives some flexibility there.